MiX Telematics is a fleet management and vehicle tracking company with operations around the world. It was founded in 1996 and spun off from Control Instruments in 2007. It has a market cap of 1.9 billion rand, trades on a price-to-earnings ratio of 18 and a dividend yield of 2.8%. Well, much smaller dividend yield than what we saw coming through.
Yeah, but it's a very nice group. Stefan Joselovitz is the CEO. They've got some nice technology base. So, I mean, the backdrop is vehicle tracking, fleet management, and nowadays these things are not just, simple SIM card-based technologies. They tell you everything about the way the vehicle's being driven, where the driver is, why he took such a long lunch, whether he's accelerating too much, whether he's braking too hard, all that kind of stuff. So that is a product now which has been taken global because, South Africans were quite big on vehicle tracking for obvious reasons. And Stefan is based in the US. They're doing well around Africa. They've got a European-based business, so they've really done well. And you can see the share price. Literally in the last couple of months, they had a trading update indicated earning 75 to 80% higher. So they've popped up to the 3 Rand a share mark. And I think people are beginning to sense that this is one that, is a fun team with a good niche that's going to go big.
So would you be getting into MiX Telematics right now?
Well, I mean, again, I like to break it down into two halves. I mean, so it's got its consumer business, it's got Matrix. Now, Matrix, if you look at it, earnings have actually gone backwards. Very tough space. So that's your retail consumer who wants a vehicle tracker, and his car is probably forced to by the insurance company. But one of the reasons why it's not only Matrix, but a couple of them are going backwards is a lot of the insurers are not now forcing people to take that, and so it becomes a bit of a grudge purchase. Why do I need this? What does it do? Does it really work? But on the fleet management side, I mean, as Paul was saying, fantastic technology. Really, if you're operating any fleet, you need this product in your vehicles because it's kind of watching your driver, what he's up to, and you get a lot of better behavior from your driver by having this product in your vehicles. So that's very exciting. I mean, I think they operate in 100 or selling in 111 countries, which is quite substantial if you think, if you think about how small the company is. But I mean, it's certainly, and it's had a lot of wins overseas and in South Africa. It's rolled out to the Eskom fleet recently. So, and I understand. I mean, it's a good annuity business. You pay monthly for your Matrix tracker, or if you on your fleet management. So that is good, but I don't know. It's done a lot recently. Yeah. I mean, look at that share price. It's up a lot.
So fleet management is the way to go for them, Paul.
Yeah, I think so. Look, the other thing I can put on the table is that Imperial has taken a 16% roughly stake in the business. The rest is held mostly by management. So it does create a little bit of a liquidity concern. But Imperial, obviously, big group with great ambitions and has tended to be an acquirer. So I'm not sure that Imperial is necessarily going to, look to increase that stake, but I just think it's interesting. And this new product of theirs, which is called Beam-E or Beam-E, seems to be getting good reception. And you know why? It's because web-based mobile technology is very modular. So you can exactly go into 111 countries and have it up and running within a moment, because all you really need is a SIM card and a computer and a connection to the internet, and you're up and away. So I do like this space. It's broken into that market cap range, sort of 1.8, 1.9 billion. So it's beginning initially to attract a bit of institutional interest. So it is a stock I like. So I'm hot on this one.
Jonathan, hot or not?
I just think the share price has done too much recently, so I'm not hot.
One hot and one not on MiX Telematics.